Today I'm breaking down exactly how to find investment properties to buy, strategies that work in any market, cost nothing to use, and can lead to serious profits. These are the same methods I used to become a multimillionaire before the age of 30, build a $10 million real estate portfolio, and consistently generate over $400,000 a year in passive income. I'll also be walking you through a real deal using my personal deal calculator, the same tool I use to analyze every single real estate investment that I make, and you can download it completely free. Just click the link in the description. So whether you're wholesaling, fixing and flipping, or buying rental properties, this video will show you how to make better deals, avoid costly mistakes, and earn more on every transaction. All right, let me show you exactly how I do it step by step. I'm pulling up Redfin right now so you can see firsthand how I find investment properties in real time, using just a few filters and a strategy that anyone can follow, no matter what market you're in. This is exactly what I would do when looking for my next deal in any market. Now, there are other tools like Zillow, Homes.com, Realtor, and LoopNet that you can work this exact process on. You really don't need any fancy tools or expensive software. I'm literally doing this with free tools that are available to anyone. The key is knowing what to look for, and I'm gonna walk you through all of that right now. So I'm just gonna pull up a random market. Let's go with Oklahoma City, because I've heard a lot of things about Oklahoma City. It has a lot of great opportunities and it's been making headlines as a great place to invest. It's known for its low cost of living and business friendly climate, and it has a lot of opportunity for real estate investors. While I might not want to live there myself, a growing population and a strong demand for affordable housing means that I might want to invest there. And I've been investing long distance almost my entire real estate career. So here we are taking a look at Oklahoma City on Redfin. So I always like to start with the location. That's the first thing you should do. So go ahead and enter your market as you pull up in Redfin so you can take a look and follow along step by step. First off, there's 4,577 homes listed for sale right now on Redfin. While I truly believe that there's a price that makes any piece of real estate an investment property that can make you money, it doesn't mean that we want to pursue every single property and that all of these listings are going to sell to an investor. So let's go ahead and filter out some of the properties. I like to start with the type of property that I'm actually looking for. So I personally invest in single family houses and multifamily properties. So I'm going to go ahead and initially filter that out. So that removes almost 800 of the listings that we're seeing that were probably pieces of land, condos, townhouses. Now, I'm not completely opposed to investing in those types of real estate. I just prefer single family and multifamily. There's less restrictions. There's no HOAs or condo associations a lot of the time. So that's just kind of been my lane, and I've done very well in that space. So I continue to invest there. So we have nearly 4,000 listings to choose from, but how do you really find the best investment properties? One of the ways I like to do it, which is the first strategy I want to show you today, is sorting by price per square foot. So here on Redfin, you can select a different layout. See, they have the split layout, which shows you the image of the home, the pricing, and you can scroll down through it. But I prefer the table layout because it's almost like a spreadsheet. You can see more listings all at once, and you can see the key facts that really can help you decide which investment properties are worth pursuing. Here you can click on the price per square foot. So when I click on it once, it begins to sort it by lowest to highest. So if we begin here, we can see which properties are selling essentially for the lowest value per square foot. The price per square foot is simply the asking price of a certain listing divided by the square footage of that piece of real estate. So this first listing that we're seeing here, it's listed for $42,000. So let's just take a quick peek at it. So this is pretty much the cheapest property on the market in Spencer, Oklahoma, which I'm going to assume is in the Oklahoma City area. So it looks like it's pretty much a teardown. So this might actually be selling for land value. And it does say that it's just under an acre of land. It does have 2 existing structures, but are inhabitable. So this is probably more of a teardown. So that's why it's listed for $26 a square foot, which is extremely cheap, right? So if you're looking for land, sometimes it might be listed in the residential properties because there might be existing structures that are simply there to tear down and really rebuild. So let's actually try to find something that is habitable, okay? So this next one, this is selling for $40 a square foot. I've purchased pizzas that are more expensive than this house per square foot, okay? So let's go ahead and take a look at this listing. This is listed for $699,000. And let's see, this looks like a lot of housing for the price. So this says amazing opportunity to rehab on a 32 unit property. Wow. So you can get 32 units for $700,000. But of course, these are pretty much just the shells of properties. So if you're looking for an investment property that you can basically build it from the inside out, you're basically buying a shell. And some investors really like that because at the end of the day, you'll pretty much have a brand new construction property and you'll have 32 units. So for someone who's more of a developer or who can do full gut rehab, something like this would pique my interest. Let's kind of keep looking using the strategy. You know, pretty much everything we've seen so far is going to sell to an investor. So these are truly all investor properties. You see this next listing in the description, it literally says incredible investment opportunity in downtown Capitol Hill. So this is a historic building that needs a ton of work. So it needs a lot of investment, right? Which is, you know, why I would consider this an investment property. It's boarded up. I'm assuming the location is probably pretty good considering how they're listing this. Seems like it's kind of in the downtown area, 2 commercial spaces. Let's kind of keep clicking just to see what else we're going to find. You know, I like to kind of move quickly through these listings to really get an idea, you know, especially if I'm not familiar with the market. If it's the first time you're looking at a particular market, you know, you want to look at a lot of properties just so you can get familiar with what's available. You know, so you can kind of click until you see something that really is more aligned with what you're actually looking to invest in. So let's take a look at this right here. This looks like it is a 3-2 home, which is a perfect canvas for your flip or rental property. It needs a full renovation and is situated in an area with ongoing redevelopment. Sold strictly cash only as is. Bring your imagination and seize this opportunity for your next project. So this is exactly the type of listing that is primed for investment. An owner occupant, right, a retail buyer cannot just buy this property and move in. They're going to have to spend some money. They're going to have to invest capital to improve this piece of real estate before they can actually move in. I mean, look at these photos. It's even worse on the inside than it is on the outside. So I certainly would not want to take a shower in this bathroom as is. I don't even think it has running water. So this is a pretty beat up investment property. So it obviously needs a full renovation. Probably it needs to get totally gutted. So, I mean, that carpet is almost black. Like it's disgusting. So yeah, we can kind of just quickly look at these photos. This is clearly going to sell to an investor. Lenders will not lend on a property like this. You can see that the slab is completely cracked across the entire room. There's graffiti in the wall. There's boarded up windows. So this is pretty rough, okay? You know, which is why it's a almost 1,600 square foot house, 3-bed, 2-bath, selling for $80,000. Something like this is what investors look for, right? If you're looking for an investment property to buy, you're looking for things like this if you want to create value immediately, right? So if you buy this at the right price, you improve it, you do full renovations, technically after it's done, it is now worth more. So you might, let's just say we paid $80,000 for it. We spent $60,000 on the renovation. So we're all in at about $140,000. Then let's say it's worth $200,000. So that means that we just built $60,000 of equity in the property. That means that if I own this and I did this project, I added $60,000 to my net worth. This gives you options. You could either sell it, you could refinance it, or you can just rent it out and collect the cash flow. So let's keep going. Let's take a look at a couple other of these properties that we're finding. This, and again, pretty much all of these listings have the word investor in it. And if we take a look at this, you know, it's certainly not something that you would call a move-in ready home. So these are just some examples of what we can find using the first strategy, which is sorting by the price per square foot. Now, the second strategy I want to show you is a similar model of filtering out properties on Redfin. You can also use any of the other major platforms to do this, but this is simply choosing your location and then filtering by price. So let's look at the cheapest houses and scroll through the listings and see what we can find. So all we have to do is click on the price button still in this table view. And so we can get an idea of what are the most expensive properties selling for in the area, right? And I don't want to say that, hey, just because it's expensive, it's a bad deal, right? And I'm also not saying just because it's a cheap property that it's a bad investment property. It's good to just get an idea of what's the ceiling of what's selling and what's the floor. So if we look at the cheapest properties for sale in a market, we're probably going to see some of those similar deals that we were just looking at. But let's go ahead and click on this since we haven't looked at it yet. This is a 1-bed, 1-bath, 640 square foot property selling for $57,000. So this is pretty much the cheapest property in the area. And I would say that this looks like an investment property. It literally says investment opportunity. This property is perfect for investors looking to add to their portfolio, located in a thriving development area of the city. We can learn a lot just by looking at the photos, the listing description, and really just taking a quick look and seeing if this is something that we like. You know, the structure is one thing, but you also have to get familiar with the location, right? So we're just kind of taking a look at the surface, and then you really want to dive deeper and make sure that this is something that you want to buy. So let's keep taking a look at what we have here. Here's another deal. This looks like an absolute dump. It says investor alert. Property is loaded with potential and ready for a buyer with vision. It might have a lot of potential, but it probably also has rats. So proceed with caution whenever you're going to buy a property like this. But again, this doesn't mean that you only have to buy properties that are absolutely trashed, that are missing entire roofs like this one. You can also buy properties that are turnkey and ready to go, and those can make fantastic investments. So let's kind of move to our next strategy, which is using the fixer-upper filter. So this is one of the reasons I love Redfin and why I always say that Redfin is one of my favorite websites on the internet. So I'm just going to go ahead and reset all of these filters so we can kind of just start over. So maybe if you just want to use this strategy from the get-go, that you can just kind of follow this process. So again, I'm on Redfin, I've typed in my location, and then I'm going to go back to the filters. You might also want to adjust the price. So if you're not looking for a $1 million plus property, then you can simply filter out the price. And let's just say we're looking for $500,000 and less for our next investment property. Now, here's the beautiful part. Redfin is one of the only platforms that I'm aware of that has a fixer upper filter. So whenever I'm looking at a new market, I always like to use this filter to get a quick snapshot of what the deals are in the market that are fit for an investor, right? If you're looking for investment properties, especially value add deals where you go in and improve the property and create equity like I was talking about, this is what you want to do. Yes, you're going to miss out on a lot of the deals. A lot of things slip through the cracks, but this filter is Redfin's way of telling investors these are the properties that you want to look at. So I'm going to click that button and I'm going to see that there's 28 homes that Redfin deems as a fixer-upper. They probably pull from the photos, the listing description, and other data that they have, and they tell you which ones are fixer-uppers. So let's take a look at the first one that pops up. This is definitely a fixer-upper. It says cash or private lender only. It will not pass an FHA or VA inspection. It is in need of repairs and updating. This is a great investment property located close to I-35, et cetera, et cetera. It's being sold as is. Seller will make no repairs. Okay, so we set out to find an investment property, and this is an investment property, as it says in the description. So let's just take a look. Again, it looks like a total beater, needs a full renovation, and will not sell to anyone other than a cash buyer or someone using private money. So we can see it's pretty beat up. Let's take a look at something else, maybe something a little bit more expensive. You know, I want to just only show you the cheap houses. So let's take a look at this one. This looks actually pretty nice from the outside. The description, investors don't miss this. Ever want to flip a house? Now is your opportunity. 3-bed, 2-bath here, brand new roof, HVAC, high-end stainless steel oven, new toilets, great, saves you some money there. But also home needs TLC and price to sell. Pool is as is. Okay, so there are problems with this. And so if you don't want a full-blown rehab, that's okay, right? The first several properties that I bought as an investor were turnkey rental properties that were already rehabbed, and all I had to do was close on them and buy them and start collecting profit. That was it. So something like this is better for a newer investor who doesn't want to have to do every single item in the house and spend, 50, 60, 100 grand on repairs, right? You don't necessarily have to do big rehabs to make money and be successful in real estate. So in this case, this actually looks pretty decent, and it is possible that it could sell to an owner occupant. This might actually qualify for financing. So, you can see that this pool is pretty green right here. That tells you it's been neglected. It's got some kind of tarp there, so it's probably leaking and has some cracks in it. So something like this is a great fix and flip opportunity, right? If you're looking to flip houses, if you're looking to wholesale real estate, this is really the easiest way to find investment properties to buy. So, this is a really solid filter. It's taken us just a few moments to find all these great deals, and these are just on the MLS and waiting for an offer. Here's another one. This is a 2-1 over 1,200 square feet. Looks like it's actually pretty in decent shape. It says it's in the heart of Oklahoma City. It's a historic home, offers rare opportunity, tons of built-in equity, ready for someone to roll up their sleeves and restore its timeless charm, original, large yard, etc. With a little TLC, okay, a little bit. They're kind of downplaying the repairs it needs, but you just kind of have to learn to read through the lines. You have to talk to the agent, right? These are the things that we teach our students in our programs: how to talk to real estate agents, how to pursue these properties like a pro, and really make the best decisions, even when you're at a distance, right? I'm in California and we're looking at properties across the country, but that doesn't stop us, right? We have a process, we have a system, and we can pursue these deals and profitably buy investment properties even at a distance. So keep in mind that the fixer-upper filter can also be used in combination with the other strategies that I'm talking about in this video. So for example, we have the fixer-upper filter and we've sorted by price. You can also sort by price per square foot. So if you have a fixer-upper and you're looking at the cheapest dollar per square foot, you are definitely going to find a lot of the cheapest investment properties in the area, okay? So let's take a look at this one. This is also quite distressed as well. So I'm trying to find something that is in a little bit better shape. I've shown you a lot of very distressed properties, this one as well. So again, if you're a value add investor, if you flip houses, these strategies are going to yield a ton of results. So if you're complaining that you don't have a lot of leads, that you don't have a lot of opportunity in any market, you need to do these strategies to find your next investment property. So let's take a look at this one and then I'll move on to the next strategy. So this one actually looks pretty nice. This one has been on the market for 3 days, single family, built in 1990, which is actually relatively newly built compared to a lot of the markets that we invest in. So this looks nice. I love the brick build. Looks like it's, the exterior looks relatively maintained except for that pool. Looks green. And inside it's lived in, but it actually looks pretty decent. So just kind of flipping through the photos, this actually looks livable. There's nothing too wrong with this, but it could definitely use a facelift. I'm sure a lot of the finishes in here are original. You can tell, some of these, the vanities, the lighting, this is all older style, right? Even the photo on the wall, that's older style, right? If you know what I mean. So let's just, let's just see what the listing description says. It says that, it's large corner lot, 4-bed, 3.5 bath, versatile bonus room, needs a little bit of TLC, bring your vision. These are the keywords that you want to find in the listing description, which will tell you that it's a great investment property and that it's worth looking further into. Also, when it says home is being sold as is, that's typically a sign that, hey, this property probably has some issues. They're probably willing to negotiate, and this can be a great investment opportunity. But at the same time, it's really not in that bad of shape. So really just, it comes down to what your strategy is, what your risk tolerance is, what's your appetite for rehab, right? Do you want to just do light cosmetic work, or are you willing to get in there and change out some of the mechanics of the property, some of the utilities, change the plumbing, electric, the HVAC, the roof. So really just know what you want to get into, what your budget is, and ultimately that will help you decide which properties to pursue. All right, so now I want to show you the fourth strategy, which is the keyword search method. So let's go ahead and reset all of these filters once again here on Redfin. I'm going to search in Oklahoma City, and we're going to look at the keyword search box, which is over here. You click on the filters button, and then you scroll down and go to the keyword search right here. So you can really put any keyword into this box, but the key is knowing which words to put in here. So I always like to use words like cash, cash flow, investor, rental, TLC, as is, handyman special. So a lot of those buzzwords that we already saw in these listings, you can go ahead and put them in here. So why don't we just start with the word cash and see what comes up. Now, keep in mind when you do these searches, you're going to get different results. And depending on your market, you might not get any results on a specific keyword. So this just basically means that this keyword is somewhere in that listing, right? The real estate agent put that word in the listing for a reason. So some of these keywords will yield results. So right now we have 38 homes that have the word cash in them. So cash doesn't always mean that it's an investment property, but a lot of the times it will. So for example, this property does not look like it has anything wrong with it. I like to see why. So this basically is just saying sellers prefer to sell in as-is condition, cash, conventional, FHA, VA. So this is more of a retail listing, right? This is selling to an owner occupant the way it's marketed. So you just have to be aware, like this isn't something that I would look to pursue unless I was looking for a primary residence or maybe even a high-end rental. That's not necessarily what we're looking at this point. So if we go in here, the second listing, this looks like more like what I would be looking for. So this says excellent investment opportunity, right? We're looking to find investment properties to buy. This looks like it's being marketed as that exactly. So it says this well-maintained 2-story multifamily property features 8 total units. Wow. So you can get an 8-unit building for $525,000. And if you're a pro, you can negotiate an even better deal than that. So this says 6 one-bedroom units and 2 studio efficiency units, all in good condition and fully occupied. So when a property is fully occupied, my mind goes to what's the rent? What are the expenses? What's the net income on this property? Because commercial real estate and income properties are valued based on the net income that they produce. So that's where my mind goes. And this even says, this property is under a master lease with the Homeless Alliance, offering guaranteed rent payments and stable tenancy. All units have passed housing authority inspections, ensuring compliance and minimal maintenance concerns. This is a turnkey income producing asset with a strong rental history and no reported issues. Ideal for investors seeking reliable cash flow with minimal oversight. So back to the keyword search, if we searched cash flow, right? This is what would show up. This listing would also show up. And the fact that we searched the word cash, this is why this listing showed up, because obviously cash is part of cash flow. So let's just take a quick look at this 8-unit building. So it's all brick. It looks like there's multiple structures. So there's this one. This looks like it has some kind of vinyl siding on it. And there's also a brick structure. So a little bit tighter units. And what's interesting, and they have what sounds like a corporate lease, or they're leasing to the government. So a lot of times those can be long-term leases and really truly guarantee you that long-term rent and stability. So yes, you might have some tenants and residents in the property that normally you wouldn't rent to, but they're not the ones who you're having to deal with. You're going to deal with that organization who's managing and subleasing and renting out the rooms to these tenants. So I'm not sure exactly how that works. I would want to, interview the listing agent and really understand if this is something that I would want to get into as an investor. But typically when you have 8 units and you're paying this price and you have a lease situation like that, especially when it's marketed as a property with strong rental history and cash flow, then it probably is going to produce some pretty serious returns. What I also like to look at too is the price per square foot. So you can buy this structure for $131 per square foot. This is cheaper than you can build properties in a lot of markets. So there's that intrinsic value of being able to buy cheaper than you can actually build this property. So if you're an income-focused investor, right? If you're looking for investment properties to buy and hold and create cash flow, like myself and a lot of my students, you would look at something like this. So let's go back and see what else we can find. Here it looks like this says it's a 3 income producing unit property located in University Edition. It's a duplex, features one unit rented at $925 a month to a long-term Section 8 tenant who prefers to stay. Second duplex is currently leased at $775 a month under a new lease. Small house rented for $650 a month. So total monthly income of $2,350. Okay, and it's only priced at $275,000. So we're getting close to that 1% rule where the monthly rent is about 1% of the purchase price. So normally that indicates that it's a good deal. This is what we call the 1% rule in the real estate investment industry. It says, in addition, there's a lot of rental upside, saying that a lot of units typically rent for $900 to $1,000 a month, and small houses range from $700 to $800 a month. So essentially, you have an opportunity to buy this with day one cash flow, and you can turn over the units over time and raise the rents, and then you'll even have stronger cash flow. So that's a great opportunity for investors. This also says that the seller's willing to package this property with another property that's a duplex offering a total of 5 doors. So again, this is great for an investor who's looking to buy and hold, to collect income, and ultimately, create long-term wealth through real estate ownership. So if we go back to the search filters and we type in a different keyword, because cash isn't the only thing that we can search for, right? Why don't we look for rental, right? So we've looked at a lot of great fix and flip opportunities, but let's talk about, some of the rental opportunities, and we have seen some already. So let's take a look at this one, for example. So this one, I like to kind of search for that keyword in the listing to see why did it show up. So this says that it's a 2-bed, 1-bath home with a additional unit, separate garage apartment with 1 bed, 1 bath. Okay, so it might be an illegal duplex, right? So you have to dig in a little bit further. So, that's not always as straightforward as a legal duplex where there's 2 separate addresses, right? I would be wondering if that garage apartment is permitted, right? Are they allowed to have that and allowed to rent it out? So that's ultimately what I'd want to investigate. But for $142,000, you have 2 units that can rent, you're probably getting a pretty good deal. And the good thing about buying something like this, although you might have an unpermitted unit, you're buying a property in a residential neighborhood typically. So your neighbors are also single family homes, meaning they're typically higher quality of tenants, people who keep up their properties a little better. And normally property values will go up faster in areas just like that. So again, you're going to get different results depending on what keywords you use. So that's why it's good to have a list of keywords so that you can try different things and really align it with what you're looking for in your next investment property. So now we know how to find investment properties to buy. But here's the thing. This is where most people stop. They think they're crushing it just by finding investment deals. But the truth is, finding an investment property doesn't make you any money. That's really just the beginning. The real value, the money-making part, comes from analyzing the deal. And that's exactly what I'm about to walk you through next. This is the stuff most people don't talk about or teach. And honestly, it's probably because they don't know how to do it, or they don't actually do this in the real world. But I do. I live and breathe this stuff. And I'm going to show you exactly how I analyze deals step by step using the exact calculator that I use on every investment property. Plus, I'm giving you these tools for free to follow along so that you can use it in your business and close profitable deals. All you have to do is click the link in the description or go to realestateskills.com/calculator to get your copy. So go ahead and grab your calculator and follow along as I analyze one of these investment deals. All right, so I'm just gonna hop back over here on Redfin and click on one of these properties. I really liked that property that we looked at that wasn't in terrible shape, that seemed like more of a cosmetic job. This one, all right. So this one at 663 Wandering Way, for sale for 16 days. So I like this. It seems like it's probably in a nice area just from the curb appeal. I mean, the grass is still alive, that says a lot. And it says, it's a 3-2. So what I'm going to do is pull up our deal calculator. This is what I recommend using on every single deal that you're looking at. I've personally used this to invest millions of dollars of my own money and invest in plenty of distressed properties all around the country. So the great thing about this right here is a fix and flip calculator at its heart. So if you're looking to buy a property, fix it up, and then sell it, this will help you calculate your profit and your return on investment. So let's go back to that deal on Wandering Way. So First off, I like to start with the after repair value. So this is the value of the property once it's all fixed up and brought up to its highest and best value in its current shape for the market. So how we determine that is by looking at the sales comparables of other properties that are also ideally 3-bed, 2 baths around the same square footage in the same neighborhood. But we don't want to look at properties that are distressed, right? We want to look at properties that have already been renovated and then resold to an end buyer. If you want to learn how to run comps and determine an ARV accurately, you're going to want to check out my other video on our channel where I run step-by-step how to determine your ARV by running real estate comps. So let's say that the after repair value for this property is $280,000 once this property is completely renovated, okay? So that's where we like to start. We like to start with the end in mind. So if you scroll down to the bottom of the deal calculator, that's where you plug in your after repair value. This represents the total amount of gross proceeds once you sell the property, okay? So from there, we don't just pocket $280,000, right? That would be amazing, but that's just not how this business works. So we obviously have our costs. So we have our sales costs, right? We have broker commissions, we have closing costs. So this is where we can dial that in right here. And that totals about $14,000. This comes directly out of the sales price. So this doesn't mean that you're investing this money until you sell the property. So next, what I like to do is estimate the repair cost that this property will need to get to that top-notch ARV. So what I like to do is take a look at the square footage of the property as well as the condition and price point. And I use a rule of thumb based on the price per square foot of repairs on a property. So I would multiply about 1,500 square feet by $40 to get to about $60,000, right? And I'm rounding up a little bit just to account for surprises, because when you're flipping houses, there's always surprises. So let's say that the rehab is 60 grand to turn this house into a stunner that's going to sell for $280,000. So I would plug that into our deal calculator where it says repair costs. So I'm going to plug in $60,000. Now I'm going to plug in the holding costs. Okay. So your property taxes would go here. So what you can do if you have no idea what they are for the area, at least this can give you an idea if you scroll down and you look at the tax history on Redfin. So this is a little bit misleading because you can see here that the assessed value of this property is only $17,000. So this property tax number is a little bit irrelevant, but you can do a quick Google search of the property tax rates for the area that you're investing in and then ultimately make your own calculation. So I'm just going to go ahead and ballpark a number for the sake of this example of about $350 a month. Insurance, I'm going to plug in about $150 a month. Again, just making a quick estimate. I'm going to put in another $150 a month. This property does not appear to be in an HOA. So these are our holding costs right here. Now, as far as the hold time on the property, this is how I calculate hold time. This is the time from when you buy the property to when you sell the property, right? So that's how long you hold the property. So my rule of thumb is for every $10,000 of repair costs, I would budget about a week of time. So for $60,000 in repairs, I budget 6 weeks for repairs. But it's not just the time to rehab the property, it's also the time to put the property on the market, to advertise, to show the property. And once you've accepted an offer, you also have another 30 or so days to close on the deal. So I would take the 6 weeks and add another 8 weeks for another 2 months of marketing and closing time. So that puts us at about, I'm going to round up to 5 months just to be extra safe because we like to be a little bit more conservative when we're flipping houses. So now that I have these numbers plugged in, I can now determine what price can I afford to pay for this property. So I like to start with the listing price just to see if it makes sense, because I've purchased properties at list price, below list price, and significantly above list price and still made money every time. So what's important, my point here is that it doesn't matter what the listing price is, it matters what price makes sense for you as an investor. So it's listed for $190,000. So I like to start there and see how much money I would make in that situation. So if I buy this property at $190K, I spend $60K on repairs, and we have 5 months of holding costs, that means my total investment is $253,000 and some change. If I sell it for $280 grand, that means after all expenses are paid, I would pocket over $12,000 on this property. Now, if that sounds like a lot to you, then go ahead and pursue this deal. But for a lot of investors, including myself, $12,000 in 5 months of time and taking the risk of buying a property is not worth $12,000. Especially as we can see here, it's not even a 5% deal ROI. The deal ROI is essentially a profit margin on the total capital invested in the deal. So 5% just really isn't enough. I try to shoot for at least 10% depending on the price point and depending on the total profit. So if I want to solve for a 10% ROI, and let's say I need to make at least $35,000 of profit to get out of bed to really fix and flip this deal, then let's see what I can afford to pay. This is what I call massaging the numbers. So let's say I offer $170,000. Now this looks like I'd make $32,000 of profit and 14% deal ROI. So this is where it actually starts to get exciting. We're really not that far off from where the list price is. So I might even want to offer less, right? I might want to offer like $155,000 for this property, because at that rate, I would make $47,000, right? I'd rather make $47K than $30K, right? I'm sure you would too. And it's 21% deal ROI. So this is a great place. I would be very confident in submitting an offer at $155,000. Again, assuming that our ARV checks out, because if our ARV doesn't check out, then that's going to change the game entirely. So that's why we really want to dial in our ARV, and then we can work backwards to get to our offer price. But you might be saying, hey, Ryan, I don't want to flip houses, right? I just want to make some money and have low risk in the deal. I don't want to spend 5 months rehabbing this property. So what I like to also look at is, what about wholesaling the property? What about assigning this property, right? If I get this under contract at $155,000 and I know that an investor can make $47,000, then what if I could just flip that paper, right? Sell that contract to a different investor and make $10,000, $20,000 and just be able to walk away within a few weeks? I like the sound of that. Making $20,000 in 3 weeks versus making $50,000 in 5 months. I'd take that trade-off any day. So this is why it's great to have multiple exit strategies in your tool belt as a real estate investor, because whenever we have a deal under contract, we might decide that it's the best use of our time to wholesale a property versus fixing and flipping the property, right? Versus buying and holding the property. So this is why we want to teach you that it's important to know your options and evaluate properties in different ways so that you know what the right exit strategy is for a particular deal. So what if we wanted to evaluate this as a rental property, right? What if we just wanted to rent it out and produce cash flow? So this is exactly why we have the rental cash flow calculator, which you can also get access to on this exact same calculator. Just click the tab that says rental cash flow calculator. So now we can plug in the deal in this and determine, is this going to be a good rental property? So let's look at that purchase price at $155,000. If we put 20% down, that's $31,000 with some rent ready costs, right? So let's say we set a $60,000 to get it ready to resell for top dollar. We don't need to spend all that money if all we're doing is getting it ready for rent. So I would apply a different rule of thumb to this. So I'd take that, roughly 1,500 square feet, and I'd multiply it by $25 a square foot. So that gets us to about $37,000 in repairs. And so this should allow us to get really top dollar in rent. That does seem a little bit even high for a rent ready type of repair, but it's okay. Let's just kind of go on the higher side so that we can really get top dollar on this property. There's going to be some closing costs. So with all that being said, we'd be into this property at about $72,000 with this budget in mind. So I like to use 30-year fixed rate debt for this type of deal, especially when the property can qualify for financing. So we have a loan term of 30 years. Since it's a single family property, we can borrow 80% of the purchase price, and we're going to be borrowing this at a 6.75% interest rate, which means our monthly loan payment is $804. Over the year, we're paying just over $9,600 for our mortgage payment. So let's figure out, how much is this thing going to rent for? So if I have no idea what this property can rent for in my market, then there's a couple tools that we can use, one of which is the Zillow rental estimator. So I'm just going to type in Zillow rental estimator in Google, and we can find Zillow. So we can type in our property address and then we can put in an email address. So I'm going to go ahead and do that right now so we can check it out. And here, this says that this property that we're looking at on Wandering Way can probably rent for about $1,851 a month. Wow, that's more than I thought it was going to rent for. So I think we're going to be in pretty good shape with this rental. It says the average rent is $1,700. So that's probably like a more conservative number. But I think since we're doing a pretty significant renovation, then we can get away with a higher rent amount, right? So the good thing about this Zillow rental estimator is that you can get specific rental comps for any investment property that you're looking at and considering to turn into a rental. So we can see here that there's a property 0.4 miles away, 3-bed, 2-bath, a little bit smaller than ours, that is listed for rent at $1,860 per month. Here's another one at $1,895. That is bigger. So I think, yeah, that 1,800 number seems to be pretty fair. Here's some larger homes in the 1,800 range. So you can get a nice quick snapshot. We can just take a peek at one of these real quick just to see what it looks like. You can tell that this is professionally managed based on this little watermark in the photos. So these look pretty nice. These aren't, our property is probably going to be pretty similar, maybe even a little bit nicer depending on our finishes. And this one is a little bit bigger, 1,750. Okay. So maybe we just use this 1,750 number just to be a little bit more conservative, but I always like to run best case, worst case scenario. So I'm going to put in 1,750 here. Utilities paid by tenant. The beauty with single family homes, and this is why I own a lot of single family homes, is that you can pass off the utilities entirely to your tenants. They can put the utilities in their name, which is great because you don't have to worry about it. You don't have to pay for it. And, collecting from tenants, getting reimbursed isn't always the easiest thing. So ask me how I know. So now that we figured out the estimated rent for the property, let's just look at some of the expenses here. So this calculator makes it super easy just to plug in your expenses so that you can really truly see how the property is going to perform for you as an investment. So if you have leasing fees, advertising fees, you can plug them in here. A lot of times property management companies will actually bake that into their monthly fee. So in that case, I'm just going to leave this at 9%. Most of my property managers charge anywhere from 6 to 8% for management. And this is taken out of the gross rent that they collect. So if they're not collecting any rent, they're not getting paid. So the maintenance, we did a huge rehab on this property, right, in this scenario. So I'm just going to leave this at 5%. A lot of times I'll budget 10%, maybe even more if it's an older property, especially if I don't do a full rehab to it. But in this case, 5% should be sufficient. Vacancy. Of course, your property is not going to be rented 100% of the time. It might be rented multiple years at a time, but there always will be vacancy. So I'm going to put in 5% here. I normally would budget closer to 8%. Let's actually just budget 8%. So, anywhere from 5 to 8, depending on how good your management is at the turnovers, at the marketing, and especially how competitive your rent pricing is. So if you have a little bit under market priced rent, then you should be able to rent your property a lot faster. Insurance, I would say $85 a month looks pretty solid. Our property taxes, what did we say, about $350 a month? Again, might be on the high side, but I think it's good to be a little bit more conservative. So if there are any other fees, then you can put them in here, miscellaneous. Again, this is a single family property, so a lot of this can be passed off to the tenant, which is really great. So at the end of the day, this property would produce about $125 of monthly cash flow, and annually that would be about $1,500 per year in cash flow, which is only about a 2% cash on cash return, which isn't that great in my opinion, right? You can put your money in a high yield savings account and probably earn 3-4%. So why would you buy a rental property and only make 2% cash on cash return? But what if we don't want to pay $155K for this property, right? This is the beautiful thing about being an investor, is that you're empowered to buy properties at whatever price makes sense for you. So this is why it's so important to run your own numbers and determine what makes sense for you. So let's say I want to offer $130,000. Now we can see what this looks like. Okay. Now this thing's going to produce about $255 a month in cash flow. And this is closer to a 4.6% cash on cash return, right? This is over $3,000 a year in pure cash flow. So this is starting to look like a deal that I would be more interested in. I like to shoot for about 7 to 10% cash on cash return. If I'm in heavier appreciation markets, I'd be okay with a return like this. But I think for a market like this that we're looking in, Oklahoma City, I'd expect more cash flow. So I'd probably offer even less. And again, we used a quick and dirty rule of thumb for our repairs. Maybe I can get away with a smaller number for our repairs budget, and that would make my cash on cash return go up. So if we only spent, let's call it $20,000 to get this house ready, then that boosts my cash on cash return to about 6.13%, which is starting to get pretty attractive. And having an attractive cash on cash return isn't just the only thing you need to look at. There are other factors that are happening with this property during the time of your ownership that are contributing to an even greater return on investment. You have the property appreciation, and even just at 3 to 5% appreciation per year, since you put down only 20%, your return on appreciation is significantly higher, even double digits when you factor in the leverage. You also have the tenant paying down your mortgage, meaning with every single payment that you're making, your loan is going down and your equity in the property is going up. You also have some amazing tax advantages when you buy and hold rental real estate. You get to deduct a ton of expenses related to this property, and you can take depreciation, which is essentially a paper write-off just by owning real estate. And that's how you find investment properties to buy, using the exact same strategies that I've used to build real wealth in real estate. If you haven't downloaded the deal calculator yet, be sure not to miss it. It's completely free and gives you the power to run numbers like a pro on every deal you come across using the exact methods I covered in this video. Just click the link in the description or head to realestateskills.com/calculator to get your copy. And if you're serious about taking your real estate investing to the next level with the coaching, tools, and step-by-step support that you need to build a 6 and even 7-figure real estate business, check out our Ultimate Investor Mentorship Program at realestateskills.com/programs. I've also dropped that link in the description below. Thanks for watching, and I'll see you on the other side.